Welcome. In this video, the big news for Zbcn has arrived. So what is this news? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand.
But first, let's analyze Zbcn.
In technical market analysis, one of the most closely watched structures is the order block. These zones, often associated with institutional investors, provide unique clues about how the price may react at specific levels. In the current setup, we are observing a distinct bearish order block, and price is approaching this zone. However, these areas typically act as resistance for market participants, and it's not expected that the price will break through on its first contact. In fact, such blocks often result in strong rejections on the initial test. There are several reasons for this, which we will now examine in detail. First, a bearish order block is a price range where a strong downward move originated in the past. These zones usually contain large sell orders and dominant sellers. Institutional investors or major players may have entered positions in these areas. When price returns to the zone, previously unfilled or pending sell orders may become active again, stepping in to overpower buyers. This is why prices often reject sharply upon touching the zone. The first touch of a bearish order block is typically a test. The market wants to see whether selling pressure still exists in that area. This often manifests as a quick wick or a short-term spike in smaller timeframes. If a strong rejection follows this test, it serves as a warning to traders. There are still active sell orders, and the area is not yet ready to be breached. However, an important factor here is how the price approached the zone. If the price has been in an uptrend for an extended period, buyers may be strong enough to challenge the order block. In this case, an initial rejection might be temporary. Price could pull back briefly from the zone, then return with more strength on a second or third attempt, eventually breaking through. But if price reaches the zone suddenly and without volume, the rejection may be more severe and last longer due to insufficient buyer strength. The structure of the bearish order block itself is also significant. If the block has not been tested before, i.e., it's a fresh order block, it is typically stronger. Sell orders within fresh blocks have not yet been triggered and can enter the market aggressively upon first contact. This often leads to a sharp drop in price. However, if the block has already been tested once or multiple times, many sell orders may have been absorbed, weakening the block and making it easier for buyers to break through. That said, a bearish order block being broken isn't necessarily a bad thing. On the contrary, it signals a major shift in market structure. It means that a zone previously controlled by bears has now been overtaken by bulls. This suggests there is no longer any significant resistance in the way, allowing price to move higher. These kinds of breakouts are usually accompanied by high volume and followed by strong upward moves. However, in the current scenario, no breakout has yet occurred. The price approaching the bearish order block has captured the attention of investors, potentially increasing volatility around the area. The battle between buyers and sellers may cause sharp fluctuations, especially on lower timeframes. This can lead to an indecisive market, and investors should closely observe how price reacts at this level. Volume analysis is critical at this stage. If price approaches the order block with rising volume, it suggests that buyers are strong. But if volume decreases while price rises, the move is likely weak, increasing the chances of sellers stepping in. In such cases, a rejection is more likely than a breakout. On the other hand, a rejection from the block can offer short-term trading opportunities. That is, short positions could be considered as soon as price touches the block. However, this type of strategy carries risk. If price unexpectedly breaks through and holds above the block, short positions could quickly turn into losses. In conclusion, a strong bearish order block currently lies ahead of the price and represents a significant technical resistance zone. Price has reached this area and will likely struggle on the first attempt. This is completely normal, as the area previously initiated strong selling and may still contain active sell orders. For price to break through, strong buying interest and a high volume breakout are necessary. If that happens, the market structure could shift upward. Until such a breakout occurs, it's important to remain cautious and analyze market reactions closely. This way, investors can manage risk effectively, take advantage of opportunities, and make strategic decisions while avoiding sudden market movements. But we can't rely solely on order block analysis, so let's take a look at other metrics as well. Stay tuned.
I'm interrupting the video for a moment, friends, because BitTunex Exchange has a great campaign.
Here's how it works. After registering on the exchange via the link in the description and completing KYC, if you deposit $100 for your first deposit, you will receive a $20 bonus. If you deposit $500, you will receive a $100 bonus, and if you deposit $1,000, you will receive a $200 bonus. I think this is an excellent opportunity for leverage trading. For more details, you can read the articles below. The link is in the description.
When we carefully examine the chart, a fairly consistent ascending channel structure becomes noticeable. Such formations provide valuable information for investors, both for short-term and medium-term trend tracking. Ascending channels indicate an upward price movement trend, and the bands within the structure define potential support and resistance zones for investors. In this particular case, it is clearly observed that the price has reacted upward after touching the lower band of the channel. This indicates that buyers are still active and that the price has found strength at this support level. The lower band typically acts as a strong support level, and every time the price approaches this zone, we can see buyers step in to push the price upward again. This support line also reflects investor psychology. As long as there is no sustained price movement below this line, the overall uptrend remains intact. Therefore, the price reacting positively to the lower band of the channel is a highly favorable technical sign. In the current view, with the price bouncing off the lower band, it indicates a move toward the midline of the channel. The midline stands out as a zone where price frequently pauses and determines direction. As such, it can be expected that the uptrend will continue and investor confidence will grow until the price reaches this level. This journey toward the midline also shows that the market is once again seeking balance and continuing its movement in the direction of the trend. One of the most important things for investors is to be able to analyze how the price reacts between the bands in such ascending channel formations. When the lower band acts as solid support, the price movement toward the midline generally encounters less resistance. This could present an opportunity for long positions. Of course, in such formations, investors should also have a predetermined strategy in case the price breaks out of the channel. However, at present, no such breakout is observed. It should also be noted that the price bouncing off the lower band is not only a technical reaction, but also a sign of market confidence. These types of ascending channel formations typically appear during strong trends, with the price continuing on its path by forming consistent highs and lows within the structure. Especially if the price moves upward with strong volume after testing the lower band, this strengthens the trend's credibility and confirms the buying pressure. In this context, the most recent price action within the ascending channel presents a highly positive outlook. The reaction from the lower band may signal the start of a new upward wave. In the next phase, the price's first stop will be the midline of the formation. When it reaches the midline, investors should be cautious, as this is a key area where profit-taking increases and decisions are made about whether new buying will continue. If the price passes through this level without difficulty, the next target will be the upper band of the channel, which could represent a significant upward move from the current price. This rise toward the midline is highly meaningful not only in terms of price movement, but also for overall market psychology. If this process is accompanied by increasing volume, positive momentum indicators, and support from other technical indicators, the likelihood of the uptrend continuing becomes much stronger. However, investors should also closely monitor any potential sideways movement or indecisive signals as the price approaches the midline. Additionally, ascending channel formations are typically considered continuation patterns in technical analysis. That is, as long as the price remains within this structure, it is assumed that the prior trend, in this case an upward trend, will continue. Therefore, the bounce from the lower band is considered not just a short-term spike, but a strong signal of trend continuation on larger timeframes as well. In conclusion, the price beginning an upward move after testing the lower band within the current ascending channel is a highly positive development from a technical analysis perspective. If this movement continues, it is highly likely that the price will reach the midline. Should the midline be surpassed, the potential rise toward the upper boundary of the channel could present significant profit opportunities for investors. However, as always, market dynamics, volume, news flow, and macroeconomic developments should also be taken into account. A holistic analytical approach should be adopted instead of relying solely on technical indicators.
The tweet from Zebec's official X account, beginning with, "The next installment of our ongoing TV campaign," reflects a powerful vision for the project. This announcement goes beyond just advertising. It showcases the project's future goals, its approach, and the confidence it instills in its community. The phrase, "every second of work should bring you closer to your goals," emphasizes that Zebec is not just a payment solution, but a system that values and rewards people's effort in real time. This vision stands against the sluggishness of traditional salary systems and end-of-month payment models, as Zebec's real-time payment structure makes every second economically meaningful, increasing individual motivation, productivity, and financial control. Another important highlight in the tweet is, with Zebec Real-Time Pay, your earnings stream to you instantly. Through this message, Zebec clearly defines its key advantage over classical finance: instant payment. Receiving earned wages the moment they are earned is particularly attractive and revolutionary in today's digital era of freelance and remote work. This model benefits not only individuals, but also employers. Motivated and valued workers tend to be more productive, directly contributing to organizational success. Moreover, blockchain-based security and transparency further enhance the attractiveness of this system for both individuals and institutions. The slogan, "Don't work for later, build your tomorrow today," encapsulates Zebec's philosophy and strategic positioning in a short but powerful statement. It conveys that financial futures shouldn't be deferred, that every moment of work must immediately impact one's life. Whereas people traditionally wait weeks or months to receive compensation for their labor, Zebec breaks that cycle, allowing individuals to realize the value of their work instantly. In doing so, Zebec revolutionizes time's role in finance by accelerating the financial cycle and focusing attention on today rather than tomorrow. The announcement of a TV ad campaign is a significant development in terms of visibility and outreach. Television remains a trusted medium that still reaches broad audiences. A project's production and broadcasting of a TV ad signals not only marketing budget but also seriousness and ambition. TV ads reach beyond crypto-native investors, capturing audiences who follow traditional media. This shows that Zebec's vision extends beyond the crypto community to mainstream adoption. The way the ad is crafted is also very important. Zebec doesn't just highlight technical features, it speaks directly to people's emotions with messages like, "Every second of work should bring you closer to your goals." This marks a shift from traditional explain the product advertising towards embody the vision messaging. By appealing to user values, lifestyles, and aspirations, Zebec aims to foster emotional buy-in, a key step in building a loyal community and strong brand affinity. Another key dimension of the campaign is brand awareness and reputation. Appearing on television elevates a project from another blockchain venture to a structure with institutional credibility and public recognition. That perception matters to both retail investors and institutional partners, who evaluate not only technology but also public image. A TV ad powerfully reinforces that positive perception. Timing may also be strategic. Launching a campaign when the market is stable or preparing for a new bullish cycle can attract investor attention. Details like airtime slots, channels, and ad length directly impact message effectiveness, and these factors reflect how professionally Zebec is approaching marketing. If the ad runs in prime time on high viewership channels with compelling content, it demonstrates Zebec's strength in both tech and marketing vision. This development also shows the team's commitment and belief in the project. A television campaign is costly and requires long-term vision and confidence. For investors, it signals credibility. If the team invests in a TV ad, they clearly believe in the long-term viability of the project. That trust can influence investment decisions. As Zebec's real-time payment technology reaches more people via this ad, ecosystem impact may accelerate. As more users learn how it works and onboard, transaction volume can increase. Higher volume strengthens the token economy, fostering interest and potentially driving token price upward. Thus, this campaign may act less like an ad and more like a catalyst. With wider exposure, new users, partnerships, and integrations are likely. When the project positions itself not just as a payment protocol, but as a lifestyle, the impact can be much more enduring.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.